Nvidia stock has gained more than 100% so far this year. So if you're worried about the AI bubble popping and Nvidia stock crashing down, you're not alone, because on the last trading day, a wealthy investor hedged their 1 million shares of Nvidia stock, meaning they are also worried. So in this video, we will analyze this unusual option activity to learn the trading strategy this wealthy investor uses to protect their money, so we can also reduce our risk while increasing profits. Because as we all know, the rich have more resources to do more research and make better financial decisions. No wonder the rich get richer. So without further ado, let's dive into the data as usual. As we can see here on the option time and sales tape, on July 3rd, at the same time, 10,000 contracts were being traded for these two options that expired December 19, 2025, 120 strike puts and the 175 strike calls. So, what are they doing? Let's take a deeper look at these options. We know they are opening trades. You can see 10,000 contracts being traded for these December 2025 contracts, greater than the open interest at the 175 strike calls. Okay, so that's very important to make sure that these wealthy investors are opening trades and not closing out of their trades. Okay, and so when we take a look at the 120 strike puts, we can also see that these 10,000 contracts are opening, since the open interest was just 2,000 at the 120 strike puts. So we know these are opening trades, both of them now. Okay, and when we analyze this trade on the profit loss graph, we can see in more detail what this trade means. Is it bullish or bearish? Okay, because based on our analysis, we found that this investor was buying these 120 strike puts. You can see that we are also in the same position. That is why there is a POS here that stands for position. It is also green because we are buying these puts, just like this wealthy investor is doing. Okay, and when we take a look at the calls, you can see that this position we are selling, just like this wealthy investor as well, at the 175 strike calls. And so when we add this to the trade, these two options now, we can analyze both of these. And the reason why we also do this is we not only trade options, but for our long-term investments, we also use stocks and hold them longer term. But we use options to hedge our positions, just like this wealthy investor is doing. So you can see that this is a bearish trade. On the x-axis, we have the share price of Nvidia. And on the y-axis, we have the profit loss graph. On the zero line here, if the lines are above it, it is a profit. And so as the share price of Nvidia goes down, these become positive. And if it goes up, meaning the profits will actually decrease, because this is a bearish. That's why there's a negative here. Okay. Now, does this mean that this wealthy investor is bearish on Nvidia? Not necessarily, because there is underlying shares of long stock. Okay, just like what we have here. What we mean by that is you have to add these stocks into the analysis. You can see it is 100 shares of stock for every one option contract. Okay, so that's what an option represents, 100 shares of stock. And that is why we know they have a million shares of Nvidia, because they had traded 10,000 options contracts. And so you multiply by 100 shares of stock, and you can see here, this is a million shares of Nvidia stock. And so notice how the profit loss has changed now after adding the stock position. As the price of Nvidia goes up, it actually is now profitable, a positive gain. And if it goes down, it is a negative loss. But what's advantageous about having these options is that you can see that the risk is reduced here. This flat blue line here means that the risk is limited. This is, even if Nvidia crashes down, it will not be at a loss. There's a max loss here. You can see negative $915 per trade. Okay, so this is the way we can sleep better at night, not having to worry that Nvidia stock will crash, because this position limits how much we could lose if Nvidia stock crashes. While at the same time, if Nvidia stock goes up, we can still gain on this trade. So let's do an example. If Nvidia stock were to crash down to $100 a share, right over here, you can see that the loss would be $500 per trade. But without these options and just the stock, what is our loss here? $2,700. So do you see the difference here? We can reduce our losses with this type of options strategy. And that is why this is a very, very good strategy to reduce risk while increasing profits. Because you can see we can still make profits. So for example, at the blue line here, if we were to trade at $160, notice how the blue line shows $3,145 of profit. And without these options, the stock at 160 would also make about $3,000. So you can see how the reward gains are about the same, while at the same time we have the benefit of hedging our stock in case Nvidia stock were to crash down to reduce our losses. And so that is the benefit of this type of option strategy. This type of trade strategy here is known as a collar strategy, okay, where they are selling the calls, just like what we are doing, selling the 175 strike calls. And you can see that at the 175 strike calls where we sell the calls, this is where the profits start to also become capped, okay? And so the downside of using this type of strategy is that we cap our profit potential. But what's important about this strategy is that the reward is in our favor. You can see that this is our max profit here, where we currently are here. We have a lot more we could gain in comparison to the risk. This is the risk to this trade right here. So the risk is much less. So the reward is in our favor. So that's part of our strategy. We always want to make sure the reward is in our favor. We have a better risk to reward ratio. Because if we did not have these options, notice that the reward and the risk is equal, okay? Because you can see now that we could lose a lot more if Nvidia crashes down. In fact, if it goes all the way down to zero, we would lose everything, right? So the risk is 100% without options. Our risk is not limited, it's not capped, but neither is our profits. So this type of risk to reward here is a 1-to-1, where the reward is not in our favor. And that is why we use options to strategically make sure our reward is in our favor all the time. And so if you want to learn more on how we use options and also picking the best stocks that the wealthy investors are trading and using strategies to reduce our risk while increasing our profits, then make sure to go to our website. Let us know in the comments below. What do you think about this trade? Are you worried about Nvidia stock crashing? What do you think about this collar strategy? As usual, please smash the like button, subscribe if you haven't. Take care and have a great day.